Good morning, good morning. March 28th. Not financial advice, just for entertainment. This is Celsius. It's a stock I've traded before. Here are some of the supports and resistance, or supply demand zones, whatever, however you want to call it. Actually, they're not zones because they didn't draw the boxes, but they're similar in thinking. Anyway, I traded it and I was hoping for, a huge rally. I sold an option, made some money, rolled it into a debit spread that's now worth, hold on, this is funny. This is funny. So my debit spread is worth -$3. It's kind of, I mean, it's kind of funny, I think. I don't know. It's all screwy right now because the bid ask is like -6 cents to asking for 11. It's because it's a spread, right? I I bought the 115, I sold the 120, and then the buyers and sellers for each of those have different opinions on the value. And then when you try to, if I was trying to close this thing out, it's just nuts. It's funny. I mean, I accept that I've lost the $15 that I have in here. I'm glad that know, risk managed and did not hold on to my 125 call when it was up money. Instead, putting into a spread and de-risking. But she's calling me again. Only be, I just don't know exactly why it's gone down. It could be just that people, stock rotation, and people made their money in this and just moving on to the next trade. I'm not saying stock twits is the best place to go. A lot of these guys are pumpers and dumpers, people with their own agendas and everything. But I am, just reading into like why is it down at this point, you know? Um, some people so funny. This guy's like, my options are up 500%. Now they're only up 220. Should trim some at the top. Yeah, greed will get you. Greed will get you. Somebody mentioned reverse head and shoulders. Maybe, right? Coming down, going up. There's the head. It could go back up this way, and then it could rally back up. It's a possibility. Um, I don't know. I'm not the best drawer. It's just a chart pattern. You know, I don't know. I'd like to trade it because of the following reason. Because this is the May 17th $60 put. I was trading at 78 cents earlier. Now I guess the stock's kind of recovering on the minute maybe. I was gonna try to close it at 81. Now it's gonna be 80, I guess. Um, IVR rank, it's still kind of low. It's not like Celsius is really has super high volatility. Obviously, higher volatility is better for option sellers, but its IVR rank isn't anything fantastic like it was in like November, or this is back in late February. Then it would have gotten a lot of premium, and then you would have made a lot of you'd have gotten a lot of premium then, and then you would have made it the next few days and just tailed off. When that volatility just dropped, you would have made a lot of money. I forgot if this is earnings or not around here. So, it's always dangerous on earnings, of course. Um, but it was good. And so if you had sold puts on Celsius around earnings, you would have made money because the stock rocketed, and you wouldn't your trade wouldn't have been in trouble. I played it a bit differently. I bought shares and kind of sold along the way before earnings, and I think kept I forgot, a couple into earnings because I'm, a wuss. I just don't like losing money. There's no reason to lose money if you can avoid it. Anyway, so volatility is not super high relative to what it normally is. However, I'm going to get to the point now. What's tempting me is that the May 17th put is about 50 days away, which is a little bit longer than Yeah, usually they say like 30 days is the goal, but opportunities come up when they come up. But that's like 50 days away. And so if I were to annualize that $80, 50 days away, seven, call it seven. So it's like 560. So it's $560 a premium if I annualize it in my mind. Buying power effect. So what they're really asking for is close to $680. So I need to put up $680 to get to sell the put. And then the reason why it's 600 is because it knocks down like $80. It accounts for my premium that I'm collecting. So it's 600 here. Um, but really, you should think about in terms of you're putting up 680 to make 80, or annualized, you're putting up 680 to make 560, which is like 80, 90% annualized return, which is pretty good. I mean, there have been better trades and everything like that, but it's still, I think, pretty decent considering how far the delta is. This is $60 put. Usually they say should sell puts around 18, 20 delta. So that'd be around here, 20 delta. So you're getting like 250. I mean, you can get more. I could actually ask for 255 or something like that, but let's just use 250 as an example. This is how nutty it would be, right? So 250, you're putting up 950 basically. Add the 250 back to the 700. Let's just call it 950. Let's call it 1,000. Call it 1,000. You multiply by 7 here. So annualized, it's $1,750. You're getting 175% on the capital you're putting up to trade this thing. All right. The only reason I'm not doing that is because, yeah, maybe small PP, whatever you want to call it, but the stock's just very volatile. I don't know what exactly is going on. Do I want to own it at 70? I mean, put sellers are funny, or at least I'm funny. Maybe I don't know. Yeah, I'm cool that at that price, but then when it starts crashing towards that price, you start going, I don't know, man. Maybe I should roll it down or roll it out, or you start getting nervous because really what you want is the premium. You don't want to hold on to the effing stock. Nobody wants to. You don't want to deal with the aftermath of it all, and nobody knows where it's going. I mean, no matter how smart you think you are, right? Nobody knows, and so this is kind of it's unknown. I mean, this is the day where it just went nuts, right? It could easily come back down. There are there's some gaps, I guess, in here somewhere. I guess they've all been filled. I was reading something about there's gaps in this. So anyway, I'm gonna just keep watching it. I might have missed the opportunity. Um, it's tempting though for the premium. Sorry, and ended up being a no trade on this. But I wanted to show how much money you could make selling options if you use something like a tasty trade, which doesn't require uh, it to be cash secured as long as you're using margin. And that's something I think that Robinhood traders are probably missing out on. Anyway, thanks for watching. Not financial advice, just for entertainment. I think that cut off. Just not financial advice, just for entertainment. Thanks. Bye.